Thanks for joining us for another episode of Boom and Bust. I'm your host, Tony Clement. I'm here at the News Forum where all voices matter. It's a pleasure to have the return of our Boom and Bust monthly panel. We'll discuss the economy and how it affects you. I'd like to welcome back the Honourable Joe Oliver, former Canadian Finance Minister and Natural Resources Minister, Sandra Pupatello, former Economic Development and Trade Minister for Ontario, and Gary Marr, former Alberta Cabinet Minister and now head of the Canada West Foundation in Calgary. Welcome to you all.
Thank you.
First of all, we've got a bunch of news, economic news that we have to digest and talk about. First of all, we have a quarter-point interest rate hike, plus a pause announced by the Bank of Canada several days ago. And we got the fourth quarter GDP numbers for Canada, which showed a slowing of growth, not a recession, but a slowing of growth in the fourth quarter of last year. So I'd like to ask the panel, maybe start with Joe. Does this mean that inflation is less of a concern? We still have the food inflation issue, I think, making the rounds. And what does this mean about our ability to withstand a potential recession? Joe, why don't you start us off?
Sure. We just heard the 1 quarter point increase in the Fed, and then I think it was on January the 25th. The Bank of Canada also moved things up by a quarter of a point. I think there's a sense that inflation may have peaked, and the number is still something over 6% year to year, but quite a bit less than that month to month. And in the States, it's 5%, also less month to month. So what we're hearing from the central banks is they're still focused, of course, on inflation. That's their core responsibility. Although in the U.S. they have to look as well at employment. But there's a feeling that the eighth increase will have managed to arrest the galloping inflation. And there's a big question as to whether it could bring it down to the target level of 2%, and that's one where there's a lot of difference of opinion. Fitch thinks it may be possible, not this year, maybe 3% this year and 2% next year. Is I think what they and maybe the Bank of Canada are hoping for. Well, that would be great if it happens. This bank and other central banks misjudged the strength of inflation before. So the jury is still out as to whether they can get it down to within the target range. But it looks like rampaging inflation isn't a current issue, even though job openings are pretty strong. As in the United States, we're worried about housing and a looming recession.
All right. Gary Marr, is the inflation dragon been slain, or do we still have something to worry about here?
I think the general consensus is that things are going in the right direction, but lots of things can happen between now and then. So the problem with predicting the future is that it hasn't happened yet. When I look at it, I think about particularly about how the fiscal policy of the federal government needs to match with its monetary policy in order to really get a grip on inflation. This is something that former Bank of Canada Governor David Dodge has warned about. Carolyn Wilkins, a former, senior member of the Bank of Canada, has talked about that there has to be this consistency. And of course, we've got a budget coming up, and we'll have to see what happens there because, the projections back in November of Minister Freeland didn't really contemplate two things. One is a big spend on healthcare, which appears to be imminent, coming up in a meeting on February 7th. And the second thing is sort of significant amounts of money to respond to the United States and their efforts to be sort of moving forward on incentives for a green transition in energy. Though I don't think those two things were contemplated back in the economic forecast in the fall of 2022. We'll see how the federal government deals with that in the upcoming budget.
Yes, and we're going to be talking about the budget, I assure you of that, in the next segment. We're going to take a brief break here. We'll also hear from Sandra after the break. Please stay with us. Sandra Pupatello, we were talking a little bit about the current economic climate with interest rate hikes, inflation. Gary artfully led us into thinking ahead because in 7 or 8 weeks there will be a federal budget, most likely. So love to get your sense of the lay of the land economically and how that plays into the next budget cycle.
Well, I think a few things have changed over the course of the last year or so, and that is the global effort to help Ukraine. I think that is still hanging over our heads and causing a lot of consternation about what impact is that going to have on ongoing energy issues. And that has a lot to do with what's happening in Europe right now. Those energy bills are just pounding them. If we're complaining in North America, they are really complaining in Europe. So I think we've got a lot of uncertainty. And the finance minister was hinting at that last week, saying, look, we don't think we're out of the woods here. We're going to have to be careful. And to me, that's the kind of language that Joe will be familiar as a former finance minister. You sort of have to start reeling us in slowly on the idea that this isn't going to be a free-for-all. And I don't anticipate that the federal budget will be. I think it will be very cautionary. And they are starting to talk that way now. Ideally, they've got a health agenda with provinces that ideally, they'll be able to look at out years for larger spending. I always marveled at the provincial level that even if you threw billions of dollars at an issue, it doesn't happen overnight anyway. You don't have the manpower, female power to put people on the ground and make a difference quickly. So these types of things are very long term. And hopefully by the time we're having much more spending in healthcare, we're also getting ourselves out of the worst of a maybe a small recession. I also think that we've had enough of the rate hikes. I was very happy to hear Mr. Macklem talk about a pause to just give us some idea that, okay, maybe this is it. For people, say 60 and over, they'll well remember the 80s when this interest rate would have looked like a dream compared to what people were suffering. But this generation has never seen interest rates like we have right now. And I think it's put a huge chill in the market. GTA is already seeing it, not just with housing sales down, but housing prices dropping tremendously. So I think it's having that effect. So let's stop already. Let's get back to an even keel.
Joe Oliver, what do you expect or hope for in this budget cycle? What do you think Chrystia Freeland is going to be doing or not doing?
Well, those are two different questions. What I hope for and what I expect may not be the same. Let me just start with Gary's comments about the need for fiscal and monetary policy to work together. And frankly, in the last little while, it's been the Bank of Canada that's had to shoulder most of the burden, because as we know, the federal debt has doubled in the last 6 years, and total federal and provincial debt is forecasted to go to about $2 trillion this year, which is roughly equivalent to GDP. So when I hear the Minister of Finance talking about prudence, on the one hand, I'm encouraged to hear that, and on the other hand, I'm skeptical, but hope I'm not too pessimistic. She has indicated, Chrystia Freeland has indicated, that she's going to be focusing on healthcare and green initiatives and try to be prudent. Well, that's a fair balancing act. We know that there's tremendous pressure on the healthcare system provincially, and they do need more capital. They also need to make some fundamental structural changes, which Ontario is starting to do. But the green initiatives, and part of it, of course, is I think it was Sandra mentioned the U.S. Move to support green energy initiatives through their so-called or badly called Inflation Reduction Act has put tremendous competitive pressure on Canada. So there's going to be a lot of asks here and a lot of political pressure to make expenditures. But this is a classic situation. Keynes, John Maynard Keynes was an economist that liberals used to follow. You sort of save up when you can during a period of growth, and then you have the resources used during an economic downturn. Well, an economic downturn is not inevitable, but it likely will happen, and not necessarily a deep one.
Right.
But the cupboard is sort of bare,
Right.
and
Yeah.
that's the dilemma.
Yeah. We're going to just take a brief break, guys, and we'll come back to you very shortly. Please stay with us. I'm your host, Tony Clement, here with the monthly panel, the Honorable Joe Oliver, Sandra Pupatello, and the Honorable Gary Marr. Gary, obviously you look at the global economy in your role, not just the Canadian economy, and there are certainly signs of slowdown, recession coming. How do you see the interplay of that and what we have to deal with in terms of policy and economic moves here in Canada?
Well, one of the things that I'm most interested in is what's going on in China, because China is, a huge part of the global economy. As they've come out of their COVID lockdowns, it's been a real challenge in China. They may be able to express some growth through their domestic economy, but their supply chains are still broken. And so the result is going to be that, it will have an impact on Canadians, on North Americans. Although Canada's largest trading partner is the United States, and we're most closely tied with them, China is a strong part of the trading relationship between with Canada, and it's a good thing that the federal government is contemplating how to sort of focus on other parts of world economies, trying to gain access into areas like the Asia-Pacific region, what they call their Indo-Pacific strategy. It's a 26-page document, but it's not much of a strategy. And there's a lot of language in the document itself that says, to be determined or not yet developed. So we've got a ways to go with respect to sort of looking at marketplaces other than China. But there could be slowdowns triggered by what goes on in China in other parts of the world.
Sandra Pupatello, you're a co-founder with me of our reshoring project looking at supply chain resiliency. Do you see a continued emphasis in 2023 on supply chains and what it means for Canadians?
Well, I think the worst of the supply chain breakdowns might be over, but is by no means smooth. And I think, Tony, you and I would likely agree that we are seeing this regionalization happening in North America, in Europe, where the large OEs, if you will, the original companies that have the massive supply chains, they are having a good look at who their suppliers are like never before. And that gives Canadians and Canadian companies lots of opportunity, frankly, to get right in there in the door and say, we can do this for you here. You don't need to go overseas, because it's a difference between you may pay a little more, but you're actually going to get the product. And they've already experienced not getting the product and having wholesale shutdowns of their lines. So I think even though they're talking recession, there's so much money pent up where Canadians weren't spending during the COVID years. And then that the supply isn't there. So the demand is still strong in a lot of big sectors that have lots of supply chain. So I do think that may be our saving grace. It's not going to be as bad as we thought because there is still demand. I know we talked before that if you go into downtown Windsor, if you try to get a reservation at a great restaurant in Windsor, you're going to dinner at 9 o'clock if you don't call early. That's how busy they are. So it's sort of, it belies what might be going on underneath, because I am just seeing real life and it is moving. There are no big wholesale layoffs of people. We are hearing, big stories about the big FANG companies laying off tens of thousands at a time. But our everyday in Windsor is going really well right now, even though we know that there's some clouds on the horizon. So it's such a mixed bag of stories. It's hard to understand. I don't think it's as simple anymore. I don't think the economy is as simple as it used to be.
Indeed. Joe, we've got about a minute left before the break. Global economic impact, are you expecting that big time for Canada?
Well, the world, I guess it's the World Bank forecasted, I think, a 1.7% growth for the global economy. And that may prove to be somewhat optimistic, but clearly there are going to be very major regional differences. And there are people who are forecasting a global economic downturn. But for us, of course, the big news will be coming from the United States, where we trade 75% of our goods. And a recession is likely, I would say, and overall growth for the year is going to be, pretty small, sort of almost minuscule, and that will affect our exports, of course.
Right.
So that is going to have an impact on jobs and economic growth.
Let's continue with that discussion. It's an important one. We're going to take a brief time out. Welcome back to Boom and Bust. I'm your host, Tony Clement, here with the monthly panel, Joe Oliver, Sandra Pupatello, Gary Marr. Joe, just continuing on with that conversation a little bit, kind of mixed signals from the U.S. Their growth in the fourth quarter was a robust 2.9%. Maybe that's a bit of a dead cat bounce before things start to wind down. What are you expecting in terms of the impact of the United States economy on the Canadian economy?
Well, as I said, there's always a very significant impact, and you're right. The numbers were pretty good, and job openings, I think, were at a high of 11 million people. So that's that's there as a support. But generally, I think economists are looking for more modest growth and really an economic downturn for part of the year. They'll come out ahead for the year, but not in a very robust way, which, as I said earlier, will affect our exports. They're also struggling with an immense federal deficit that even makes ours look almost modest. And there's a huge political fight going on regarding the need to cap the budget, and the Republicans want to put some limit on spending, but they know it's a political trap if they freeze the budget for a while, and then the Democrats will start saying, "Hey, you're not going to get your Social Security payments." So they're in a bit of a trap, and McCarthy, the head of the
speaker,
speaker, I should say, is walking a delicate here. It doesn't look like he's going to try to stare them down. But this is a government that is pretty has been pretty profligate,
right,
even in the context of the pandemic. And then, of course, we're talking now about an election coming up in 2024 when all bets are off.
Gary Marr, we've got this growth, fourth quarter growth in the U.S., but you know it better than most in the industries that you follow. It can have an impact if that starts to slow down. Any thoughts on it?
Well, I think that Joe really foreshadowed that by saying a lot of the spending that's going on in the United States that drives some of this economic growth is being done by government. If you look at Secretary Pete Buttigieg, I mean, he is really putting a lot of money into the whole area of trade infrastructure, which can pay off down the road. But in the meantime, it is helping drive the economy and it's helping support it. But the whole debate over the debt ceiling that's going on in Congress right now is a difficult one. There's a lot of demands. There's not enough peanut butter to spread around. And I think that that's going to be the case here in Canada as well as we look at our budget coming up.
Mm-hmm. Sandra Pupatello, you get the last word. I know you wanted to talk about the labor market. So certainly you've got about a minute and a half. What are your concerns about that?
Well, just that I know, whatever they're going to do related to the budget, I do hope it's going to be measures, if there are some federal measures that can address bringing people back into the labor market, because that is driving costs. It's one thing to say inflation is going to get reined in, but that doesn't mean the prices are going to go down, because it is costing business more and more to deliver the same thing. So the prices may remain consistently high, just not lift more. And that's really not going to help us, because people don't suddenly make $500 more a month when they see all their expenses rise by $500 a month. And just the interest rates alone for people who have mortgages, they are really getting socked. So I think, that is making people feel really uncomfortable. Hopefully there's going to be some things in a budget in a delicate balance of not overspending, but certainly spending in the right area to bring people back to work, because that's really what we need in every sector. It is the number one issue of getting people to show up, people to hire, people with the skill set and that perennial skill trade that we are lacking in virtually every part of the country. So if we could get our head around that big issue, I think, it can push us ahead of certainly of our competitors, because it is a world issue right now.
Well, certainly the challenges are there. I want to thank the panel again for being with us today, and we'll see you next month. I don't think there'll be any shortage of things to talk about then. Thanks for joining us today.
See you guys.
Thanks, Tony.
Great panel discussion as always. They always have some great insights on the present and the future of our economy. Thanks for watching.